Hello, hello. We'll wait for everybody to get in here. We'll do a quick recap of the day. Give everybody a few minutes, a couple of minutes. We'll try to start it at 4:10. One minute. We'll get started. Four ten. Okay. How should we start this? I thought maybe we could talk about. Well, we can talk about anything y'all want to. I probably need to share my screen. Let's start with how the signal worked today. Yep, we can do that. Let's see. All right, so I think probably most of y'all were in the live session. So let's see, let's find 8:30. 8:30 was right here. So I took y'all probably remember I took this short right here this morning, and as you can see, that one bar went to the middle band and the bottom band, like almost instantly. So that was a real fast trade. Got in and out really fast. But all it was a blue background short. Nothing fancy there. So then, we started getting, we got this higher high here, and I left these like these lines on here from this morning. At the time, we didn't have any of this. Y'all remember this? We had this higher high, remember, and I was going over and saying, they've got to make this last leg here for us to have an uptrend. And I think this bar right here was the bar I left the room on, so like 10 o'clock. Let's see, is there a vertical line? And this bar right here is where I left the room. I left the live session. But I think I remember saying, they push it down, but they're only able to push it down so far before buyers step back in there. So right after I left, that very next bar was your break and go to the upside. So I didn't get any of this. And then, so you did have this, let's see, what time is that? 10:03. 10:03. Yeah, so like you had this blue background right here at 10:03. It did hit the middle band. So if you got in short right there, you would have been taking half off at the middle band. Stop at break even on the remaining. And then you got this. You finally got this last leg up, or this higher high, higher low, higher high situation. So you got the uptrend there. And if you can see, I mean, just this is what I see. I see how vertical this is. I mean, look how strong that is. I mean, that's pretty vertical, right? That's one of the things I look for. Is what's the angle of that? The angle to me determines the strength of it. There's not a lot of selling pressure there. It's mostly buying pressure when it's that vertical. And so that led us into this blue background short signal here, which ended up failing, and you can see why. Because the Bollinger Band system is an exhaustion system. It's an exhaustion reversion to the mean, which in this case the mean will be the middle band. So when things are really vertical like that, I wouldn't count on these signals being hitting target. I almost want to make this middle band like a zone. For these kind of signals, so that you'll be able to take half off pretty aggressively if it hits the zone. I almost want to do that. I'm tempted to do that. Like a zone. Put some I don't know. I'm not sure how exactly I would do it, but if you had a zone here, you would have hit the middle band, taken half off, and you would have been okay on this trade. But if a trade fails like that, if you got this blue background short and it fails like that, that should be some kind of indication to you, that we're not experiencing any exhaustion. Because if the market's gonna have exhaustion, it's gonna do it right there. It's gonna push on down because the buying pressure falls out. Yeah. I mean, yeah, it's one of those things where if this is vertical, I'm just used to looking at it, and I mean, not saying I wouldn't take this or anything. It would just be one of those I'd probably participate with a smaller size or something. I didn't take this trade because I wasn't here. But if I was, I'd probably take it with smaller size, knowing how vertical it is. What I like to see, I mean, you can let me scrunch it in here, and you can see, look how, you can see how vertical it is. And then, you have this final push up here, and you can see it's kind of, I don't even know how to, let me see if I can draw it somehow. Like you can see it's kind of like, it's kind of just rounding off. It's losing the angle. Here you have this angle here, and then you start losing that angle. That's that momentum trying to shift. That momentum's it's losing that momentum. So this was the short that I took when I got back. I took this. I saw this divergence, and then we had the blue background. We also had this divergence. Y'all remember me posting this? We had, I remember putting these big arrows on here. We had that divergence. We had that divergence, and then we also had this one right here. We got all that going there, and then I remember saying there's a lot of confluence there to support a blue background short, at least to the middle band. So that was the short. So the short would be right here, blue background, half off at the middle band, shaving off contracts as she goes. Yes, George. And then I took this long as well. Just following the strategy is all. Because we had, if you look at just the clean chart, we had this nice exhaustion short there, where it's losing the angle. That's kind of what I'm looking for is a rounded top. You see this, how it just rounds off here. You have a lot better odds of experiencing those exhaustion signals, like we would want to see with the Bollinger Band strategy. And so we got the nice short there, but we're also we're still in this uptrend, right? So it made this pull down here, push down, but we're still in this uptrend. So I expected some kind of push up. I don't care if they even just try to test the highs and fail, something like that. But so that was already looking for that push up there. Just following market structure logic. And so sure enough, we got the blue background, we got the buy signal, and blue band. Blue band would be your first target, half off there, stop to break even. And then you hit the top band would be your other target. Your stop would still be at break even. And then as this kind of starts stumbling and stuff, you can be shaving off contracts there. And then this is kind of where the note that I made about this channel. It's really a triangle, but if you want to view it as a channel, you can see, we kind of got in this sideways action. And as long as this it's okay to trade in sideways, but they need to be pretty wide swings, like wide swinging chop, because it'll run up here, exhaustion, fall down, exhaustion, push up, exhaustion, down, exhaustion, and and it just keeps getting tighter and tighter. So when this starts getting tighter and tighter, there's not much meat on the bone here as it gets tighter and tighter in there. So that's just things to be aware of. So then the last trade I took was this short here. So I was looking, following market structure, right? Higher high, higher low, lower high, higher low, lower high, higher low, or equal low down here, and then but they're basically pushing it down, but every attempt they have to push it up, every time it makes a lower high. That was what I was looking at. And I remember, Bob, I think Bob, let's see, somewhere in here, Bob took a long at 05 or something. and that was a nice like support type trade. Went long off of support. I was looking for the break and go though. So when it got down here, it broke out of this wedge here. Broke out of this wedge and closed below it. I went short right in here. I was looking for this one of these bars to close below the low, and sure enough, as soon as that bar closed below the low here, as soon as this bar closed like that, that's when we got that flush down. And it was real fast. It flushed down. I took half off somewhere down in here, and then I put my stop to break even real fast, and I was out at break even on the other half. And then it flushed up. I didn't take anything else after that. Yeah, thanks, George. Yeah, I chart the QQQ, but I trade the MNQ. I chart the QQQ on TradingView, but over here, as you can see on my Ninja chart, that's MNQ. That's I use Ninja to execute my orders. So, yeah, if you're newer, that's what's going on. Where you have the blue arrow pointing to the D at the top, I have a C. Do you know what settings I need to change to match yours? It's probably just the oscillator that you're using. You could be using like the stochastic RSI. I switch back and forth. I like the stochastic RSI. Bob likes the MACD for divergences, and I like the true strength index and the stochastic RSI. And one of the reasons I like the true strength, let me get it on the chart. Some people call the true strength the ergodic. But one of the reasons I like it is because it's not bound by, it's like, stochastic RSI goes from 0 to 100, the scale does. And so, like the divergences on the true strength index are, they're not going to be bound by the scale. So it shows the divergence is a little more pronounced. So you see that? I mean, let me draw the lines. There's the divergence there. Well, I already got a blue line there. You can see that blue line there. Does that make sense? True strength index. Let me put the stochastic RSI on there. Yeah, so so it made like an equal high basically, or it actually made a higher high from that point. So yeah, I can see why it didn't print a divergence there. I mean, it's real close, but the stochastic RSI only goes up to 100. Zero to 100. But the true strength, if this keeps going, if this goes up to, goes to the moon, the true strength, has no limitation on the scale. So, it'll kind of follow that, and it'll get divergent when it gets divergent. Yes. You can look it up and put it on your chart, and then you can change the Bollinger Bands to, you probably know how to do that, but you just go into the settings of the Bollinger Bands and change the oscillator. See this right here? It says oscillator. You can change it to, there's a bunch of different ones in there. But just change it to TSI. That'll change the... All right, anybody else have questions? I'd like to know especially if you had a struggling, if you had a tough day, I'd like to know kind of maybe if you don't mind putting yourself out there for other people to learn. Maybe a trade that didn't work out for you, or something that you experienced today that we could all like look at and reflect on. I can imagine if anybody was following the system. I mean, um, you probably like yesterday, may have struggled in here because we didn't have a whole lot of exhaustion, from 10 o'clock to 1 o'clock. There wasn't a whole lot of exhaustion there. And one of the best ways to figure that out, if is just looking at the angle. To me anyway. There may be for other people it may be easier to identify it other ways. Yeah, I did too, Martha. I found myself like trying to go short. You end up just fighting the markets all day long. It wasn't until like the end of the day where I was like, okay, you idiot. You know, we've been above the middle Bollinger Band almost all day, so you know, I definitely made some notes for myself, and that carried into today. It helped me with this, this strong move up here. I was already looking for that. Y'all saw me, laying all this out this morning. What I was looking for, so that already helped. Yeah, Nisha. If you, I mean, it'll take you an hour. You have to watch the video, but um, in the YouTube live channel, there's a I did a video this last Saturday that should help you get most of the way um, off the ground. Let me see. This is it right here. All the indicators should be available in either the main indicators channel or the other useful indicators channel. I mean, Bob said it best yesterday. You need to know the strengths and the weaknesses of any strategy you're going to use. So, the main thing about, the Bollinger Bands strategy, specifically the blue background and the buy and sell signals, they're exhaustion signals, reversion to the mean signals. And so naturally, if we don't have a lot of exhaustion, we have a lot of buying pressure or selling pressure, for, a decent length of time. Of course, the market's going to ebb and flow, right? It's going to make higher highs and higher lows and higher highs. It's going to do that. But when there's a lot of pressure one way or the other, you don't have that, those deeper pullbacks that you have when there's more exhaustion. So that's one thing to keep in mind on the Bollinger Bands. If you can keep that in mind, then you'll be very successful with the Bollinger Bands. And also, if you can keep market structure in mind, I don't care what strategy you're using. Market structure is key. Market structure is how you get in sync with the markets, and then you apply a strategy to it. Bob's strategy is more of like a what would you call your strategy? Like a support and resistance, supply and demand kind of strategy. Yeah, exactly. So the weakness of Bob's is going to be, when there's a lot of buying pressure, selling pressure, there's tendencies to blow through resistance or support. It just blows through it. It sometimes, in some regards, it just don't even. Sometimes when it'll get to support or resistance, and it'll just blow through it like nothing happened. And other times when you got normal circumstances, it'll respect those levels. And that's why Bob is successful, 9 days out of 10, because, days like yesterday are that one out of 10, day. And as far as I can remember, Bob still did pretty well yesterday. It's because he knows his strategy. He knows his system. He knows how it works. Yep, when you're a wizard like Bob, you can trade multiple system strategies. You can basically just hit the button and the market just pays you. Like you wave your wand, then hit the button, and it pays you. Abracadabra kind of thing. Well, the institutional traders have to eat too, Bob. Throw them a bone every now and then. Anybody else have questions? Anything I can help you with? That's what I'm here for. Yeah, awesome, Eric. Each day provides new challenges. Like Bob said, you have to kind of evaluate, figure out what hat you need to wear, and make it happen. Position sizing and trade management are very important. That's what gets you through the day-to-day. That's what gets you through The really good days and the really bad days. Gets you through where you can make it through to the next day, no matter what. Today I traded, this afternoon I traded with 20 contracts, almost every trade. That's very atypical for me. But we had that nice, that wide swinging range channel that we had going on there, and it was almost like, there at the beginning, every trade was printing. So, that's the position sizing aspect of it. Do you go all in when you have pocket twos every hand? Poker reference? I mean, no, you don't. Somebody's going to call your bluff at some point. There's plenty of times when you just you bet the blind. You throw your blind in there and play. There's plenty of times when you fold, get out of there, and live to play the next hand. It's all has to do with position sizing. Yep. Sure is. Yeah, I would say, the biggest struggle that we all have, me included, would be over trading and over betting. So just because you're green and you're rocking and rolling, you've had a good morning or whatever, that doesn't mean you need to sit there and take every freaking trade. Just walk away. And it also doesn't mean that you need to bet the farm on every trade. Figure out what your maximum position size would be, and then and that should be a pretty conservative number. And then trade, most of your time, trade about 80% of the time, like with a quarter of that or a fifth of that maximum position size. And then every now and then you'll get these really nice, confluence trades where you got all of these like confirmations, you got everything lined up, and then you can go up there, you can bet a little bigger. At least that's what I do. I don't bet. I definitely don't trade 20 contracts. My maximum is 25. I definitely don't trade 20 contracts every day. GC, what is that, gold? Yeah, gold is susceptible. Yeah. Okay, I'm gonna read that, Bob. Gold is susceptible to any macroeconomic news, so if you're holding trades for any length of time, you're subject to that risk. Yeah, you're putting yourself. It's not that. I mean, that would be similar to trying to trade earnings reports or something. Yeah, I mean, what sticks out to me with that, Bob, with what you said, is exposure. Traders are and investors are exposed to the market risk. That's what you're doing. when you enter a trade, when you get into a position, you're exposing yourself to the market. The question is going to be, under what circumstances are you going to expose yourself to the market? And therefore, furthermore, how much exposure are you going to put out there? All good questions to ask yourself. Exactly. Exactly, Bob. Couldn't have said it better myself. I'm gonna see if I can find something while y'all are chatting. I don't know if I'll be able to find it efficiently or not.